Welcome back, investors. Jake here. I think we've done it. I think for the first time in 8 weeks, the stock market is going to close green for the week. This is an incredible feeling. At the time I'm filming this video, the Dow Jones is up 1.1%, S&P up 1.9%, NASDAQ up 2.7%. When we go on finviz.com and check out their heat map for the S&P 500, this is the 1 week performance, a lot of green pretty much in every sector. There's been a lot of buying occurring in the last 3 days. That's what we're going to talk about in this video. However, when we zoom out and look at the 3-month performance of the S&P 500, this is what most of us have been experiencing and feeling these last 8 or 9 weeks. Unless you were holding healthcare, energy, utilities, you're pretty much looking in the red. However, it's not been that bad when you look at historical drops for the stock market. The market basically peaked on January 3rd, and from its all-time high, as of today, it's only down 13.8%. If you're a buy and hold, dollar cost average in index fund investor, you're really not down that much when you think about other historical drops, historical economic catastrophes for the stock market. Now, we did reach a low of 18%, but that's still not bear market territory. In the first 3 months of this year, with rising interest rates, hyperinflation, a war going on, a pandemic still raging on, we're still not even in bear market territory. So why, today at least, is the market happy? Why are investors buying back in, potentially pricing in that this is a local low? And the immediate reason is the Fed gave core personal consumption expenditure price index inflation numbers. This is kind of a mouthful to say, but year over year, it was only 4.9%. Now, 4.9% in any other year would be a terrible number, but given that we've been measuring inflation through other indexes at around 8 or 9%, 4.9 starts to look pretty good. Now, does this mean the Fed is going to stop quantitative tightening or not raise interest rates later this year? I still think they're going to raise interest rates, but maybe rather than a 50 basis point hike, maybe they'll only do 0.25%. We don't know, but until this inflation number for all of these indexes gets below 2%, I think the Fed is going to continue tightening. Here's the graph for the S&P 500 on Yahoo Finance, and each one of these candles represents a week. So if the candle is red, that was a red week for the market. Green, it was a green week for the market. And when we zoom in on the last couple months, you can see that the last 2 months have been pretty painful. 1, 2, 3, 4, 5, 6, 7 consecutive red candles as the market just kept selling off, basically through earnings of all of these companies. The year-over-year comparisons for all these companies were not as good as 2021. Their next quarter guidance has been pretty soft as the Fed is tightening. The money supply, isn't going to be as generous from the Fed as it's been in the past. However, look at this huge green candle as the S&P is reclaiming ground. It's back up to 4,138. When we go on TradingView, I still think a bigger drop is coming. A lower low will occur at some point this year. I look at this weekly chart for the S&P 500, and I keep staring at this 200-week moving average. The value is currently 3,486. I think some point in the next 6 months, the S&P will sell off until it reaches this level. That's my technical indicator where I'm going to go basically full leverage and put everything I have into call contracts on the S&P 500 for 2024 or 2025. Then just sit back and wait for 2 years basically. But in the short term, I've been saying this in my videos that a bounce is inevitable. At some point, the selling has to stop and there has to be basically a rally, even in a bear market movement. So we can go ahead and delete these lines, as this was a a more temporary down channel. And I'm staring at this highest high with another lower high. And I really think, this buying rally, which happens after every drop. You look at this drop here, look at all these green candles. Each one of these candles is a day. This was like 16 out of 19 days the market was green. Then it sold off, couple big candles, sold off, four huge green candles, sold off, four huge green candles, sold off. And then this was a very bizarre rally. But I think that that's what's occurring again. So we're going to get a couple more green days or even green weeks, but I think a bigger drop in the future is coming. So where is this short-term rally going to bounce to? I'm going to drag this line down just a little bit, and I think the S&P might get back to 4,374 before it starts experiencing resistance and selling pressure. I think there's a lot of people currently in negative positions, and they just basically want out of it, and they're looking for a bounce. I mean, this is basically what I'm doing. They're looking for a bounce so that they can recoup some of their losses and then basically pull out of the market. So is there a new channel occurring here? I'm drawing in lines. You can basically draw in whatever lines you want. But this looks like maybe the highest low, lower low, lower low, lower low. And I think this market is going to keep selling off until it hits this 200-week moving average line. So this convergence of when the market might bottom, my money is on August or September, which is actually good timing for me because the January 2025 contracts are released in September. So I've been saving a lot of my money. I've not been putting any money into this market, and I'm going to be making some pretty aggressive options plays potentially in August or September. But in the short term, do I want to go long on anything? And absolutely not. And the reason why is a lesson we learned this week when Snap gave updated guidance. So Snap did not report earnings this week. The CEO came forward and said, hey, heads up to investors, we're not going to meet our low-end projections for revenue and earnings. I don't know at what event he gave this to, but this was a signal that advertisers are not spending as much money. Snap gets a lot of, just generic advertisements from like ExxonMobil and Coca-Cola and Target or whatever. It's not the directed advertisements that maybe Google gets. But on just news that they weren't going to meet the low-end expectations of their quarterly guidance, Snap sold off 40%. This affected Facebook, this affected Google, anybody related to advertising. And companies only cut their advertising if they think consumer demand is drying up. So we are in a down cycle. The selling will continue. And more companies are just going to blindside their investors by doing the responsible thing. This was the responsible action from the CEO to make this public statement before they give their earnings, and then all of their investors are basically blindsided. So this is going to be happening more and more, that company CEOs out of nowhere are going to say, hey, the guidance we gave a month ago, we're definitely not going to hit that 2 months from now. And investors are just going to continue punishing these companies. So here it is, my Schwab account. I don't think I've shown this in a couple weeks. And year to date, I am down 48%, or about $29,000. But let's remember what exactly this account is. This is my active trading account in which I do speculative high-risk investing. On January 1st of 2021, I started with $25,000 in this account, and I've not added any money in a year and a half. So whatever I could achieve with this account, I was just going to let it ride. I've documented all my trades in this account for you on this YouTube channel. And it was a pretty good run. On January 12th, this account peaked at $66,000. However, I've had some pretty disastrous trades holding call contracts through earnings on Netflix, through earnings on Facebook. Call contracts just fall 95% in value when a company stock gets decimated like Netflix and Facebook has. So it was looking not terrible around March 29th. I got back to 64,000, but over these last 8 weeks, as the market has sold off, all of my option plays have just become pretty much not worthless, but pretty close. However, I'm not going to sell, on an option contract for a 90% loss when the expiration date for these contracts isn't until September or next January. I'm not doing any trading, so I couldn't make any update videos for you, but I'm not going to just lock in a huge loss when I still have time for these contracts to recover some of their value. So here we are with my holdings. This is looking pretty bad, but I still think I can get out of this by the end of the year. So with HCI, luckily I'm just holding company stock, pays a dividend. Unless a hurricane hits Florida, that's pretty bad this fall. I still think I'm going to make my money back once TipTap, a subsidiary of this company, proves its revenue growth. With Aero Environments, this one has actually been coming back. I'm just waiting for the federal government to announce some large purchase order for these Switchblade drones. I'm pretty confident this is going to pop, get back above my cost basis, and if I want to sell it for a profit, I'll just sell it for a profit. Adobe, these were negative for a while, but in the last 3 days, they've now gone positive, $174. I'm actually going to sell to close these contracts right after I finish filming this video in order to free up this cash. With these debit spreads on Google and Amazon, once again, they don't expire until September, so I haven't really lost my money yet. But currently, they're debit spreads, and if I don't think that the debit spreads will be in the money by expiration, what I can do is I can buy to close my short legs and then sell them at strikes below my long legs to turn them into credit spreads. It's a way of getting some of my money back. So if Google and Amazon rally pretty nice over the next 2 or 3 weeks, I might flip these from being debit spreads into credit spreads, as I think maybe their share price will never get back to these levels, and then I can get some of my money back. With Apple, this is turned pretty much against me. I mean, Apple used to be at 180 and this contract was up 100%. Now I think it's down 14. Back up 18% today, which is pretty nice. If I can get back above my cost basis for these 3 contracts, then I'll just sell to close them. I would rather free up the cash and maybe in a month or 2 start buying puts. This Facebook call contracts, these are pretty much worthless. I just have to decide when I want to sell to close them for a $6,000 or $7,000 loss. For tax loss harvesting purposes, I might not want to get out of these contracts until the next tax year, 2023. So I'll be locking in my $7,000 loss in 2023 rather than 2022, once again for tax purposes. But I've got the flexibility, and who knows, maybe Facebook could, miraculously come back and rally to be back above 340. That would be a lot. Texas Instruments has been fluctuating. The market can't decide whether or not it hates or loves the semi stocks. I'm currently down 30% on these contracts, and if I can just once again get back above my cost basis, I'll probably sell to close them and look for better opportunities as far as once again buying puts or maybe credit spreads on the put side. So a lot of people also ask, what else am I doing in my TSP, which is my 401k, my IRA, my Morgan Stanley account, and my Fidelity accounts. I'm just holding index funds. And I bought these 200 shares of State Street's SPY basically at the top of the market last November. My cost basis is 464. I'm down 11% or about $10,000, but I'm just buying and holding these index funds for a very long time. I'm still collecting dividends. I haven't realized any losses yet. It's not really making me lose sleep at night just holding an index fund. Once you've, traded options and you see the value of a contract go down 95%, an 11% drop actually makes you feel pretty good. But I still think this drop is coming, and we're going to reach this 3,400 or 3,500 level for the S&P. When is this going to occur? And I think it's going to happen in July during the next round of earnings calls and earnings reports. And I know this is just a single data point, guys, but I placed an order for this MacBook Pro from Apple on March 18th, and today is May 27th. So we are 11 weeks past when I paid $3,600 for this notebook computer. And Apple can't charge me. They haven't charged my credit card yet because they can't promise the delivery of the computer. So this to me is insane that, with these lockdowns in China, with Apple's production capability being completely decimated, Apple's not going to make their quarter. This is the largest company by market cap in the S&P 500, and they're just not selling stuff right now. I understand they have other streams of revenue not dependent on producing hardware, but I mean, this is $4,000 worth of money that they've not had on their books for 11 or 12 weeks because they can't make the products. It's that bad in China as far as supply chain and shippings. So Apple is going to give their next earnings on July 25th. This is the same week usually that Facebook and Microsoft and Tesla all give their earnings as well. So when we look at the last two earnings season, once again, investors just kind of anticipate there being bad news because the year-over-year comparisons won't be good. Next quarter guidance won't be good. So Apple reported January 27th. We can flip this to be the dailies. So when we look at earnings season, this week was earnings season. So there was a huge sell-off the week before, 2 weeks before, earnings season. The next one was April 28th. We'll go to the charts. So April 28th is this week right here. So this is the last time all the big tech stocks gave their earnings reports. And sure enough, the market peaked a month before and then just started sliding down in anticipation for earnings. So here we are. We're looking at these big green candles as the bulls are coming back. However, it's a fake out, and I think there's going to be a rally over the next month, and then a month before the next earnings season, Wall Street's just going to sell out again. So do what you want with that information, but if we can get a rally back to this upper trend line, I'm going to be buying some put contracts on the S&P 500, and we'll see if we can get some of my account balance back before the end of the year. Okay, that's all for this update video. If you found it informative, if you like my investing videos, please give them a thumbs up. Really helps out with the algorithm. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.